Good afternoon, everybody. I wonder if I was just yodeling on the YouTube video prior to turning on the VTF, because that would be interesting. No big deal. Just sitting here yodeling to myself, getting ready for the afternoon meeting. I'm sure you guys get the same. All right, let's jump in. Oh my gosh, don't even start. Don't even start. I am an associate member of T3 Eating Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You can carefully consider whether trading is suitable for you in light of your own financial condition. If the disclosure should be the exact same as it was at the end of last week, but you know, it's not. I'm out of Palantir. See this Palantir? Cross it out. It's not there anymore. Got out of it on Friday. I actually got back into it today, but I liquidated that trade into the up move also. So that one is now fixed. All right, cool. So nothing about the day, but interesting the same. Not really tight spy range. It's seen a lot more of these really tight spy range days recently. So really tight range. We can see that here on the 5 minute chart. Just a pretty big gap down, an attempt at a recovery. Did not recover as strong as the Qs did, but not as strong as the IWM was off the open. Pretty much went sideways all day and rolled over a little bit into the close. So here at the end of the day, we've got the SPYs down, the S&P down a quarter of a percent, the Qs down 0.34%, and the IWM. I was really disappointed that Nick actually gave me follow through from that opening move. So you can see here just boring the SPYs, very boring, like I was just talking about. Limiting action is we just get to open, they just got negatively impacted by income and AMD with some of the planners that was in very weak of input to kind of staging a really impressive snapback, right? So off the 15-minute low or 15-minute lows are oftentimes important. Off the 15-minute low here, we get a great snapback to the 80 man on the 5 minutes of the queue. I remember watching how well this is moving in. I remember on the way up, so our finding the cues is going to be really important parts of this market. We'll get to see if these things the value into the medium and then we work our way down, but we can move a little bit better. We haven't seen well over the course of this like 12 minutes that right before we break down higher, I was like, it's like holding in so long, we did break out higher. And that's what happened. Gave a 15-minute clock credit, and I was like, you're doing really well. You didn't know any of some students from here saying you could be doing this kind of like not conviction on it just because it seemed like there was too much time in this recovery. And then the teams kind of continued to grind up. They really fully filled the gap to a certain point. I think they got to flat rolled over a little bit in the last hour. It's easy for the IWM, but you don't think use was super clean at the open. More, solid open with the IWM, so it's relative strength of free market. But now for the 10 minutes. Yeah, this is exciting. There's some paper here, and I know there was some speculation in the VTF that some of that sounds like I'm underwater on YouTube. I'm on my travel setup for the day. If you guys are able to bear with the underwater sound on YouTube just for today, I'll look into it if I'm ever using this computer setup again, which eventually is going to happen. Let me know if it's unbearable or not. If you can make out what I'm saying, I just send it to Fifth and we can deal with it for a day. I'll be back tomorrow. Yeah, I know the audio is good in the VTF. They're saying the audio is poor in the YouTube for whatever reason. So let me know what you guys think if you can survive the day or not. Anyway, I'll continue on until I see more commentary. Um, yeah, so this is the 59 look at the screen here. Like, this on a nice full flag, 80 man the flag through but we never got any continuation, which was a little bit disappointing. And then this rolled down pretty far as continuous. And it's kind of barely from panel. So don't think he's going to it so quick. Um, yeah, so it's fine daily chart. You can see just tight handle, but we're holding the ADMA here, which is okay. The Qs, same deal. A little bit wider of a handle, but it's holding the ADMA. We're holding our major support levels, so it's fine. And so I'm gonna do that, even though it's not gonna be it's calculating really, I really like this candle. I like this. I always say you never read an inside ball, because it's just an inside panel. It's just, range within a range. It's very tight. But so I'm not going to overread it, get my own advice. But with the importance of the candle as well as being not great with the close on lows and a little bit of an upside pull within the confines of that inside panel. So let's see. I'm gonna continue to broadly say what I said in the morning meeting, which is as long as the market is holding above the 15 Fed day starting point from Wednesday of last week, where we just pretty much rallied that entire afternoon. I think we was bullish. And we want to continue to buy dips. We had a dip this morning in the queues. If you took that advice and you were, looking for opportunities to do one the NASDAQ in the beginning of the day instead of going short it, it just like they worked out really well. And that's just the easy part as long as the market is continuing to hold above its major levels. And right now, the major levels that are out there are the starting point from 2 p.m. Wednesday last week, which you can see here on my chart all the way back down here. So we're still ways away from that, you know, $6 or so away from that in the queues and just eyeballing it. You know, $4.50 in the finals. I mean, yes, this guy's going to be down $4.50 in a day. It's not even of. IWM here off by $3.50. So, know, continue to buy the dip. Continue to buy it's relatively strong. I want to say the same thing every day. Just, sorry, Gabriel. Continue to buy the dip. Continue to stick to one side of the market. No relative strength and relative weakness. There's still opportunities out there with full names like a new player or whatever. But I don't think we have any real business from the fruit side of this market until unless we lose level levels. It can happen tomorrow, it can happen a month from now. So that's kind of the state of the big picture of the market. We pre-predicted, we had some extension from the last week after the Fed. We've now predicted the average for the last 30 seconds, basically up to the ADMA here, and then um, and then that's it. So we want to see if this can hold. Could be that wrong. I apologize for anybody that's on YouTube and is struggling with that sound. Uh, like I said, it's just for the one day. I'm not going to be able to troubleshoot mid meeting, and tomorrow I'm back on my other computer set up, and everything will be normal again. Cool. All right. So I think we did better today. You have a great day today. I don't mind admitting that. You have a great day. You have a great day. The swings maybe after the day trade's kind of all failed for the most part. The red line is loose news. This daily I wanted to go $3 for $3 the open. I think it really needs to in this thing. It's sitting close by. It was really mad. It was part of the problem. I had some free market from an average price that was not good. Like 340. Now the last thing that does me was constantly happening. Um we had lost an extension. And when it cleared through 3, which is really where I was looking at it, if we got through it, I think I could have like a buy sell or something at $3 and 1 cent. I was able to add I think the same thing after this move. But I used to we just didn't feel good for the move that I was really greedy with it on my game plan. And then it came down and stopped me out and took a loss in that one. Like writing was playing on the way down a little bit, which is something that I can always preach what we can do. You always preach what we can do on time, especially now like this. It's kind of, campaign at this point. It's week on the daily chart, it's week on the 5-minute charts with on every time frame. If you're fighting on things, that are, proper movement that you want to at least get by them on the way out. Like, let's say for a typical signal, people experiencing trail, if you're trying to buy it, once the trail comes in, you're buying on the way up, and if you need downside extent from local plans, you can do that. And then you can move along to the level that it's really creative with based on that level. Yeah, for me, sometimes, if you're going to do something doing this, well, I generally practice what I preach. Sometimes I think it's smart, and I will, I'll start building in small, I'll start building in small, and then I'll try to get bigger in certain spots. I'll play with my position or whatever. I'm feeling like a little bit aggressively in 50 or so, just because it was deeply extended there. Maybe even this first play on the 35 bar. Never got any real balance. Maybe 5 minute rest period inside 5 and down. Headed down on the position, average down, losers, right? Maybe sometimes, not always. Uh, yeah, like this down here, but okay, usually be able to buy some and then, just balance against the withdrawals. That was also played for me. And I just, let's say that probably the two things maybe a little bit more aggressively. Almost everything else I did was with maybe positions that I already had open, including Tesla. Just kind of sort out a little bit. If it's such a changing to me, stop me out of my food swing. Really put down. And then probably get something like 176, 176, 178, let's call it, on the upside, which minutes and something like this the main thing. And then, I was adding a little bit to the extension. The first one I think it was pretty cool, but also which I did really good execute on these for 174.99 basically. And that worked out okay. Positive in Tesla then. Yeah, even with that, I'm actually negative in Tesla. It did turn positive by $50 and I'm swinging it to the short side. So yeah, the fun fantastic thing for me. Um, Oran was doing the restaurants on the day of the open this morning. Johnson delivered with us. It's his idea in the morning meeting today. He brought to the table that the bad news that was negatively impacting AMD and Intel. It's both annual recoveries, by the way, positively impact ARM. I think the lockdown comes inside day up. So this is the better thing that was out there. It's included in a while. No one really gave any thought to me for that 0.55 at all. So yeah, I mean, someone probably thinking someone hurts and it didn't work with the name, you don't take things and they're gonna work or not work before you take them, you take them because they are part of your edge and you look for, creating continuation. Um yeah, you can take the opportunities as they come, and just because it failed doesn't mean that it was a bad opportunity or a bad fit. So there was some decent opportunity I think in the first, hour or so of the film session today, and then it just got, I think, really boring pretty good again, especially with the spies. So that's not anything else to reference, but I am happy to answer any questions that you guys have or to talk about anything that any of you guys might want to talk about. Anything at all. Whether it's my pumping skills, my yodeling skills, or anything else. Cool. So having a look here in the VTF. Nice job, Jeffrey. Question I think I'm seeing is from Jerry. I have a basic and high-level question on applying support and resistance levels. I'm attempting to determine when to apply these concepts with tail and leg patterns, as opposed to horizontal support and resistance levels. How do you know when to employ which analysis? For reference point, I'm analyzing gas. Cool. So, you know, typically, the fastest way to be able to really understand support and resistance is to get under these big line levels, kind of like what you're first asking about, right? So, you can clearly hear 135 is with one resistance and gas just broke out 14 inches ago, right? You have a high here in 4, 134.43. You've got the high here on March 8th, 134.74. You got the high here on March 15th, 134.80. A few others in front of it. Um, Exciting. So basically, 135 is street line resistance. Now, that's how I like to look for levels when I'm doing my research every morning. I like looking for those clean levels that are like that. That's what I want to find. Now, your question here is trying to take that supply and demand concept and applying it to problems, wedges, panels, triangles. So, just trying to eyeball the curve here for a really good example of it. I'm not saying anything that really stands out to me. But, broadly speaking, and, a lot of people do this, like Scott Ritter's a big fan of, he calls it being a cocktail napkin technician, which I thought was funny. But you can do what I call the line game, which if I even remember how to play that game, yeah, you could just like say, here's the spot, and then here's the spot, and here's the spot. And definitely not doing this perfectly. And you could like, draw all these different lines in here and be like, this is panel or point support, this panel point resistance. If you have a wedging pattern, right, where the triangle is like kind of coming in, you can kind of draw the lines that create that wedge. I feel like we saw one recently in something. I don't remember what it was, but um, and I understand doing that. I'm not a huge fan of that, to be honest. For me, when it comes to patterns or field patterns, I'm more of a stickler for my definitions, where I'm less interested in what's above or below, like the line that I drew, and I'm more interested if it's like going above or below the more recent important pivots that are what's that, in fact, it's creating the line that you're drawing. Um, Pivots represent something to me. Pivot points, again, you can think about it like a wedge type of pattern or a symmetrical triangle type of pattern or those, wedge type of patterns. I think of a symmetrical wedge or symmetrical triangle that has higher lows and lower highs. That's moving. I don't really care about, the line support. I care about it at the symmetrical wedge what are the most recent peaks, usually the highest pivots, because you've got, again, lower highs coming in and higher lows coming in. I, for me, want to see the break of the pivot, that actually became powerful. Because the most recent high, let's say, your most recent lower high, is important because the power of time different buyers. I care that this is able to go above that place because now it is demonstrating to me that there are now enough buyers in this state that are enabling it to break above a key spot where sellers previously couldn't do. And now for some reason, as buyers being taken from the past, they've been able to do so in this moment. And I understand that within the context of what a wedge pattern actually is. A wedge pattern is a pattern where buyers are stepping up and sellers are stepping down, and eventually someone wins the battle, and whoever wins the battle is the break of the wedge pattern, whether it breaks up or it breaks down. And patterns are on someone selling it's different. I definitely understand if you want to grow those lines and have a rough idea of if it's the whole line support, approximately where it should pivot, or even though from that plan, if it's the whole, line resistance, approximately where it should pivot. But about it's not planning the pivot itself, right? It's like trying to guess that it's not becoming to this linear line of line support, so I'm going to be looking to buy instead of trying to take that guess, why don't I just wait for the credit loan after to come in, perform the statement creating bottoming tail, and then I can come in and actually buy off the reference log. like so many different emotions of driving. Like my parents had two and three. If I did a better job getting today, I would have only blocked up and on the way up boost the level and put myself in that club. Right? That's what was potentially happening in for me, even though it, failed up as well. It's very clear and very obvious that some of the here for the first half hour, you get this clever in the turn bar, you get this your buyers are attempting to regain control from sellers. That's why that tool exists. You can now buy there to see if those buyers can maintain control for long enough to get a snap back into that equilibrium zone. And then that becomes really familiar. You've got maximizing volume. If you bought kind of mechanic tools and really place it in 15, 16, or 15, 47, so you've got, 14 cents worth of risk. You've got room for this thing to snap back from, 1585, 1585 to the 80 MA, 1625 to the 21 EMA. So you've got, the potential risk of 13, 15 cents and you can for the potential to make, you know, 45 to 75 cents on the reward side. You're not going to sell it's going to buy now. You're letting it come to you. You're saying, okay, you're doing so you're creating this channel. But see if you can maintain that after the long there with the room, and now you have most rewards in it. So, obviously, I'm using it as an example of 5 minute chart. If you go back to, whenever we're looking at that's creating this ascending panel, instead of just trying to say, all right, it's coming to your large world, when it never goes perfect, because when you're literally just connecting things here, it doesn't necessarily mean anything. Like, you usually just put below that line and snap it back up. You simply maybe not prove it's fine and put it down on the way down, because it still would be, even if it's in an upward plane and upward plane, if you're buying it into the lower band of that channel, you're still buying on the way down. So it could fall there, it could sort of buying on the way down and not huge amounts of risk, understand that, hey, this is opinions of this, just whole, and now after what trying to make this feeling that they're coming in to prove it, the prove the man is to the continuation is continuation that's making things actually viable to level. So with it helps you really prefer the straight line support and resistance when you're thinking about support and resistance. Uh, next, I played Arm last Thursday after the Fed day, and today, Arm has got relative strength since last Thursday. My average price was 133-ish. Okay, so it's going to be after Thursday. That is what I think you're telling me here. I know, maybe not. Thursday's here. Okay. Your average price is 133-ish. It didn't hit my stop on Thursday, but it didn't close well. I turned to my size and had a small piece for the swing because of the strength compared to the market. Okay, I'm fine with everything I'm hearing so far. This morning we broke through 136. Okay, pre-market, which had a hard time breaking through multiple times. I'm assuming you mean on the previous days. I can see that. You can see 136 holding roughly on Thursday, holding on Friday. Today pre-market gaps above it, cleared through pre-market. Um, so I thought okay, has been also put up to the daily 80 MA, so I was super green. I only threw 136 today, and I only sold 20% of my total position at 132. I love it. Only one's got cruising, not somehow again, but also it hasn't broken today's low. I closed all of my evidence connection for the close, still be positioned for 133. My question is if I should keep down more of my position since it closed pretty bad and simply be down tomorrow. And if you can pretty much perfectly, I would not consider only the stock that I have in 3. So it closed totally today. It's even probably an upside tail on its daily chart. I'm not keeping any of the ad. You made a little bit on the mat today, it seems, like the neck that you took today, despite how super, super, super greedy you are. I think it's a fantastic job. But I would say, I think that if you've got a swing trade on, I always say this, you want to be treating the billiards hard at that point. You don't want to be getting in just because of a one bag close or one 5 minute candle. It wasn't worth keeping at one to this point if you're willing to give it back some space, right? You're not in this to get out of 138 or even if this one to begin with is too long of a name. You're in this because you want to see if this thing can drop its way to 160 or 175 and really break out above all the recent resistance that the thing has. So since that's the thought process we want to to begin with, I would not anticipate the current position to that state that's $5.5 of the money in the close today because I didn't close well. Yes, to Campbell and the fact that it closed poorly means that you now have a higher probability of failure and a lower probability of getting that big move. But the trades are on, and it's too easy to talk yourself out of trades when you're already in them. So I say, stick all the way out. Um, Cold Smoke Brian, when you ski 24 inches of powder, do you have a feeling of euphoria? You bet I do. One of the greatest feelings on earth. Bill letting us know that tomorrow NASDAQ releases the updates to its short interest app. So you might get some squeezes somewhere. Great information. Cool. FSR, New York Stock Exchange prevents delisting proceedings. Right, well, I did see that from everything again. Apologies to anybody that's on YouTube. I don't see any questions coming in from YouTube, probably because you guys can't understand me. That should be back to normal again tomorrow. Just give me the thumbs up anyway. And looks like we got through everything that was in the VTF. Again, kind of a quieter day today. Hope you guys had a better trading session than I did. And one day doesn't mean for So we'll pick it up tomorrow. Have a wonderful night, everybody. I'll see you then.